going to record. So we're recording now. So for those who are watching the recording, we were all just chatting about current market conditions, which is kind of a good transition to the main topic Mike has today, which is the 2-1 buy down, which is kind of a hot topic right now, a product that's been around for many, many, many years. But we just haven't been in the right market that there's been much interest, we're kind of in the perfect market for it now. So Mike's going to talk a little bit about what the 2-1 buy down is, and then how you as agents can both talk to your sellers about it, because one, they might be receiving offers with them, or two, they might want to be using it as a concession, which would, let me admit Claire. Just wait a second while Claire's joining here. So one, as a list agent, you might want to talk to your sellers about it because they may receive offers that have this. And then also, instead of doing a price reduction, offering a concession might cost them a lot less, so to speak. And then for people working with buyers, it's always good to educate them about it because yes, you know, the seller has to give as a concession, but your buyer could always offer asking price or over asking price even to pay for that concession. So Mike, why don't you take it away and tell us a little about the 2-1 buy down?
Absolutely. Thank you. So today we're going to be talking about the 2-1 buy down, which, as Carolyn stated, has been around in the market, but being a seller's market for many years now, it just hasn't been relative because we've had, you know, buyers in the pool of 3-4% that are qualifying for a lot more than they were in previous years, which is why, you know, listings were getting multiple offers over ask, which is really what drove the price point up in the markets. Since April into May, month over month, we've seen 0.75% to 1% increase in interest rate up until this point, which has led us to where we are at roughly 7% 30-year fixed mortgage on a 10% down payment. And as Carolyn stated, 3-4 months ago, that principal and interest payment would have been $2,100 minus taxes or without taxes and insurance. And in today's market, this is based off of a rough $600,000 purchase price. You're looking at roughly a 33% increase to that monthly payment at $3,100 principal and interest. Now, obviously, that's very scary for buyers, and it's leading to what we're seeing over the past 3 to 4 weeks with listings that are coming on, not getting much traction, having to reduce price, et cetera. And I think the biggest thing that Carolyn had stated, or maybe even Erin had just said this, is the expectations, not only from the seller side when you're taking listings, but also from the buyer side. You know, what are we really expecting to get out of this market? And this tool for the 2-1 buy down program may ease some of that pain for the home buyer, and the sellers can, if properly taught how this works, can market this into their potential list price and expectations to try to get some further traction. So how the program works is a 2-1 buy down program is a temporary buy down. It'll drop the buyer's interest rate by 2% below the note rate for the first year. And then in the second year, it will drop the note rate to 1% below the note rate, which will save them thousands of dollars over the first 24 months. Now, the buyer will receive a concession from the seller to cover these costs that will go into escrow upon the closing. Now, Carolyn had sent out a PDF sheet that we created last week. If you guys have access to that, take a look at it. It'll break down all of the figures. We based purchase price off of $600,000 with a 10% down payment. 6.9% as of Friday, which is actually down. I just ran some figures. Home Possible and conventional 10% down are at roughly 6.7, call it 6.75 today, which will give you a principal and interest of about $3,500 on either one of those programs. So think about that. $3,500 principal and interest. That does not include tax. That does not include insurance. That does not include PMI. So first-time home buyer going into a $600,000 property, which is roughly the average purchase price in any of our areas, is going to be over $4,000 a month. Now, why are you not getting many offers? Buyers are scared. Who can pay $4,000 a month minus your car expenses, minus heating bills that are coming, I mean, you've got to make $150,000 combined income as a first-time home buyer just to even qualify. Now, there are obviously people in that area that can qualify, and maybe they're not pulling the trigger right now because those payments at $4,000 plus are just too much for them to handle, knowing that we're headed towards a recession. There's going to be job loss. There's going to be situations, that aren't good in this market, and we all know they're coming. Not a lot of people want to say that they're coming, but we all know what's coming in the next 6 to 9 months. So this program, if applicable to the situation, will give the buyer a 2% reduction for the first year. Now, what does that mean as far as the note rate? $3,500 a month. Now in year one turns into $2,865. That's almost a $700 monthly savings in year one. In year two, their payment would adjust and it would go to $3,200, which would save them an additional $350 a month. Now, the cost and how this works is you're basically deferring interest. And what happens is the seller will issue a seller concession, which will cover the 2-1 buy down. The cost in difference of that $700 a month over 12 months is roughly $8,000. In the second year, roughly $4,500. So all in this scenario, the seller would concess $12,500 into the deal. It would go into an escrow account every month. That $700 savings would be applied in month one, month two, et cetera, down the line. Now, the good thing for the buyer in this situation is, let's say that the market does swing back our way in the next 18 to 24 months or 12 to 18 months. If the rates were to come down and they were able to refinance out of this mortgage into a lower rate, anything that was held in the escrow account would be rebate back to the buyer upon that refinance. So it is a true concession for the buyer of $12,500. Now, as Carolyn had stated, this is going to be a better option for listings and sellers as opposed to a price reduction. Price reductions are probably going to be more than $12,500 in most cases if you're at $600,000 in order to try to attract a different buyer market. So if the seller is upfront, if you guys are upfront with the sellers and say, hey, we may need to utilize a 2-1 buy down in order to generate a little bit more traction, they're only going to give up $12,000 roughly within the deal. And they may have a buyer that comes in and now they're comfortable within that first year and second year, knowing, hey, based off of projections, we might be in a recession for 6 to 9 months. Once we come out of it, rates may go back down into the I would assume into the 5% range, somewhere within 18 to 24 months. That's what's being projected by some of the analysts. We were at, I don't know if any of you guys were at the meeting in Middleton, with Cherry Tree a couple of weeks ago, but there was a forecaster there from Bank of America who I think was pretty spot on. It says that job loss is probably going to be about 4% going into the Q1, and then leading into 2023, we should come out of recession, hopefully by the beginning of 2024, where you'll see rates come down. Obviously, the Fed is trying to stranglehold the economy and stop people from spending, which has led to multiple rate increases, assuming there's going to be another rate increase of almost 1% at the November meeting. If that happens, mortgage rates go a little bit higher. We're going to see even less traction over the next couple of months. So this is a great tool to present to not only both the buyers who are going to have more affordable payments in the first 2 years, they'll have escrow funds available if they're able to refinance. For sellers, it's less impact on the net proceeds that they're going to receive adversely in conjunction with a price reduction. And then it's going to increase the attractiveness of your home and your buyer pool. Now, the difficult part of the 2-1 buy down is it has not been prevalent in previous markets. So a lot of sellers are not going to potentially understand completely. Same thing with buyers. And we can't really market from the list and the seller perspective, oh, we're going to give you a 2-1 buy down. So how does this transpire between the buyer pool and the sellers? That's where your job as agents are going to come in. As long as the seller knows what's going on and how you're going to market it, the open houses and a little bit of traction, you can talk to the other realtors and say, hey, listen, we may be open to concession, which you can utilize for 2-1 buy down. That's where you put them in my hands to go over kind of the reduction in fees and monthly costs, et cetera. Now, the buyer does have to still qualify at the note rate of 7% in this case, which again, a lot of the first-time home buyer market has come out, and they're just not being able to be approved because the income levels are not there. That we can't do anything about. However, the pool that is there and the potential buyers that are there, this will provide them affordable payments and less stress of going into a new property. And maybe they do pull the trigger on an offer, as opposed to saying, no, we're going to wait 6 to 9 months. Maybe the market's going to crash. Maybe purchase prices are going to come down. And that may be the mindset of a lot of people. However, I've been doing this for 15 years. I've seen this is now going to be the third situation in 15 years where the market's potentially going to crash. Compared to 2011, the market there, you had a lot of home buyers with reduction in price. They bought high, they were underwater. They decided to wipe their hands, leave their properties, foreclose, which is why we had a lot of foreclosures hitting the books. However, they were able to do that because rents were relatively low. So they could walk away from their home, they could get a rental, and they could be comfortable with that monthly payment and not have the stress of being upside down, et cetera. Today's market, rental, much different. Rents are higher because these purchase prices have pushed things higher. Well, landlords and homeowners have increased their rental price. So today, homeowners are going to be more likely to stay in their home, pay their monthly payments, and see how the market and those values are going to be reactive to this current environment, which is why I don't think that the market is going to crash. I think that there's going to be a reduction in price, which you guys are already seeing, 10, 15% possibly in purchase price, maybe a little bit more, but we're not going to see that complete crash where everyone is anticipating may happen. So from our seat, we need to educate these buyers and we need to say, listen, here's where we are, here's projected forecast. If you truly want to be a homeowner, now is the time to buy. Utilize the programs that the lenders are putting out there to help you. And the lenders, especially in the broker channel, are definitely trying to help. It's this 2-1 buy down program. They're pushing this a lot. There's programs, 40-year terms coming out with interest only to try to react. I mean, they're doing what they can to put loans out there that are going to be feasible for people to afford and try to keep this market afloat. I think it's a great tool. We've always gone back, let's say 10 years when this was a buyer's market, concessions were very prevalent, right? It wouldn't be out of the realm of possibility for you to get a contract and have the buyer requesting $5,000, $10,000 in seller concessions to cover closing costs, et cetera. That was a very prevalent tool that I used to love to use with my buyers to get them into the properties, keep cash in their pocket as opposed to them dumping money into the transaction. This tool, 2-1 buy down, will do the same exact thing that used to do in the previous buyer market. It's, like I said, 2 things for the buyer: more affordable in those first 2 years, less stress, and then for the sellers, it's less impact on the net proceeds. It's self-explanatory once you lay it out to the seller and you use these charts that we've put together. You can kind of go over what the price reductions would be if that was your first step as opposed to a concession. And then from there, hopefully, we can attract some more buyers out of this pool. If anyone has any questions yes, Erin.
So I have 3 questions so far.
Mm-hmm.
Okay. And I might have missed, I had to talk to Bonnie really quick, so I hope I didn't miss anything. Why is it called a 2-1 buy down? Like what?
So the note rate is set, let's call it 7% is what the qualifying rate is. What will happen is in the first year, the buyer will pay 5% interest. In the second year, they'll pay 6% interest. And then in the third year, it will go back up to the 7%.
Okay, so it's based on the amount, it's based on like the 2s, the 2%, the 1s, the 1%.
Correct.
Only if I'm talking about this, I want to make sure I sound like I know.
Yeah, so it's basically a deferred interest that the seller is going to pay their deferred interest, where they're going to put those concession funds into an escrow account, or the lender is going to put them into an escrow account. And every month, say the payment is $3,000. The borrower is going to pay $2,000, $1,000 from the buyer. Escrow is going to go. They're still going to the lender's still going to get their full payment. They're only getting 2/3 from the buyer, and then the other third is coming out of the escrow account. Now, again, if you were refinance or sell prior to that, those funds are the borrower's funds. They would get reimbursed with any of the leftover funds. Now, if your seller does not want to go for a $12,000 or $13,000 concession on 16 or $600,000 purchase, they also allow for a 1% buy down for the first year. So that would cost roughly $4,500, where you could come in and say, hey, we'll give a $5,000 concession. You can utilize a 1-point buy down. It'll save you roughly $350 a month for the first year. However, I mean, the attractive part for me, I mean, 12,000 off of 600. I would rather, if I was a seller, I would rather get a net proceed of 587 as opposed to hitting the market at 6 with no ambition of doing the credit and then price reduce. I mean, if you were at 600,000, what's your average price reduction? 20 grand?
So I reduced my 699 by 25 grand, and then we got 10 below that. So that's like
35,000. Right.
And
Now,
if we had done, yeah.
Correct.
Exactly.
So, personally, looking at the figures, if I was a seller, I would be pushing this from the get-go, trying to get as much of full ask as I can. And the buyers want something, right? When they come in the negotiating phase, you show them even the smallest bit of a credit that the seller is willing to give you, and everybody's happy. If you come out the gate with a $13,000 concession, the buyer's like, wow, okay, and we're saving $700 in year 1, $400 in year 2. That's amazing. This seller really wants to help us get into this home. And now maybe that changes their mindset where, no, we're not going to wait 6 to 9 months. We're going to take this. We're going to get into the property. We're going to project that over the next 2 years, we can refinance to hopefully in the 5% range and save that amount of money, as opposed to continuing to pay. I mean, you're looking at $1,000 per bedroom in rent, and any 3-bedroom, 2-bath anywhere right now is going for $3 grand. So the savings in getting in, plus you're paying principal and interest, your balances are going down. Buyers just need to be educated on what the monthly payments compared to rent is actually doing for their long-term wealth.
Yeah. So, and I'll just say the other two together, but, does it matter what type of loan it is? Like, can you do this with an FHA or VA? And then my third question after that was, what can somebody turn around and sell the property a year later? Or are they locked in because of like this money being in escrow or something?
No, it can be utilized conventional FHA, VA. The FHA and VA, there are some restrictions, and I can send out the full breakdown from UWM's website on those. But as far as selling and refinancing, there are no restrictions. There are no prepayment penalties. That concession is truly the borrower's money once the file closes. So it'll go from escrow to deferred interest. If the loan was paid in full, i.e. sold or refinanced, anything left in that account would be reimbursed to the borrower. So let's say they go 12 months and then they refinance, they're going to have roughly a $4,000 amount coming back to them through that escrow account.
I'd like to know what are the ramifications of like advertising this, like to say, here's my listing and here's like, how do we legally do that?
So that part of it is the challenging part, because I don't think legally that you're going to be able to come right out, put it on the MLS, we're offering concession, etc. It's going to be the internal, hey, we've got somebody that just came by, they're interested. You're talking one-on-one with the buyer's agent and saying, hey, if you come in with this offer, you may want to talk to, Mike Roberts, Model Mortgage. He's got a 2-1 buy down program. Our seller may be open to some of that verbiage. And then that would be where I come in talking to that buyer. If they are referred to me, hey, you can utilize this. Here's how to structure your offer. And let's say the seller is not willing to go above or below 600,000. That's what they want. Well, we can talk to the buyers about, okay, if that's truly their bottom line number and you don't have the ability, and most home buyers are tight on down payment and financing, et cetera, go over ask by 10,000 and request a $12,000 concession. The seller is still going to get their bottom line number. You're going to get what you want. And that's the back and forth and the legal part of it, that yes, we're not going to be able to market this straight out with the listing and say this is what we're offering. But those internal discussions between the agents, between myself and the buyer, when offers come in, and then the sellers are going to be prepared when they do have an offer that says, hey, we're getting a $13,000 concession. Yes, the buyer's utilizing that for the 2-1 buy down, so they're comfortable with those monthly payments. And Carolyn, we'll have to get with a model legal and UWM and really see what the legality. I mean, all of the lenders are pushing this right now, so I'm assuming there's ways around it.
Right. And same thing. Sorry, I can hear myself in your office, Mike. The flyer that I sent out earlier, we can customize these for each listing. So Anita, if you had a particular listing, we can adjust the numbers, the mortgage amount and that to kind of more reflect the property that you have on the market. So if you know, like this here is an example of a $600,000 purchase price. Well, if you have a property you're putting out for 700 and you want us to adjust these numbers, we could even do it at like 715, because that which kind of hints at like you might have to offer a little more. This is what the scenario would look like. I think the biggest impact is people seeing from the beginning what the reduced mortgage payment is, because that really makes people say like, wow, yes, they have to qualify for the higher amount, but I'd be way more comfortable paying, $2,800 the first year instead of $3,500. And a lot of buyers do have that similar feeling of, what, I do feel like the rates will come back down in the next 24 months. So this makes me feel like I kind of get to take advantage of those lower rates that I missed. So if you have a listing coming out, reach out, we can adjust the number so it works with your scenario. So you can have it out from your first open house to say, well, we have this, if you're interested in 2-1 buy down, here's this information. They don't have to, obviously Mike's a great resource. You can call Mike, they can call Mike. If they have their own lender they like to use, it's most likely their lender offers this product as well. So they could speak to their lender about it. But Mike is a great resource and very knowledgeable about it, and can kind of price out the scenario a little bit ahead of time. So, okay, if you're going out at 700,000 and this is, today's rate is 6 3/4, this is about what the concession is going to be. So you can let your sellers know ahead of time, and you can have a flyer out that kind of reflects what that price would probably be.
I think that's going to be
feel free to reach out. It's all customizable.
Yeah, and I think that's going to be the biggest thing, as you said. How do we, legally market this? Having these open house sheets available with the 2-1 buy down right on the counters. It's got your picture, it's got my picture. The buyers can pull these from the open house. You don't even have to discuss it up front. They can take it and say, look at the sheet and say, wow, this is what we're going to save. Hopefully they contact us, or as Carolyn said, if they do have their own lender, a lot of lenders are doing this as they're trying to gain market share.
And we can co-brand it with the agent's information on the left and Mike's on the right. So if they're taking the flyers, they have your information on it too. So just reach out and we can customize it with your information and to reflect the price of the house that you're putting on the market.
Shoot.
Katie, you had your hand up. Did you have a question? You're muted.
Okay, sorry. I was gonna let you ask Rana first what her question was, but I think I answered it myself, but I'm gonna say it out loud. So if I'm worried that the house isn't gonna appraise, I can go ahead, ask, and I'm representing a buyer, I can go ahead and ask for the larger amount and even write in the offer, if it doesn't appraise, we'll then settle on the smaller amount. Like we can structure it that it would change. And then if it does change, is there a delay in the closing? Because it is at appraisal, which is near the end, or is it not that big of a deal that it can just be?
No, I mean, anything's going to be adjusted, based off of appraised value. So if the house does not appraise, then you're going back to the negotiating table and you're saying, hey, here's where we're at. The concession would still be in play as long as they restructure to include the concession to be in there. I mean, you may have a seller that doesn't want, if the price point doesn't appraise, it's 20,000 less. Maybe they don't want to issue an additional 12,000 concession. So that will be in the renegotiation phase between the buyer and the seller. Obviously, if the buyer was expecting to get a concession and it comes in low, they're probably going to want to keep the concession in there, restructure the verbiage, et cetera.
Right. And my concern is too, because although the market's shifting, sometimes a house is still getting attention. So to keep the offer strong without making them fear that, I could just write it that it would just reduce or go away based on that way it's not because that's my because I've been still losing out on houses with buyers, yet my listings aren't moving. So it's like unfair because my buyers,
Right. And the buyer has to qualify at the higher rates. You don't need to worry that, oh, the house didn't appraise and now we're getting rid of the concession. It doesn't matter because they qualified at the
And
note
that would
rate,
just
not
be
at the
an
reduced rate.
addendum. If, if we're in process and the file, the appraised value comes in lower, we're just going to issue, formulate an addendum between the attorneys with the price reduction, what's agreed upon. And again, it's total renegotiation between seller and buyer at that point.
I feel like by the time you get to the point where you're using this for marketing, I don't think you're worrying about appraisal prices. I think it's like going down. Like, I don't know if I'd use it right out of the gate, but I'd use it which I continue to have second week open houses. I'd use it on the second week open house because it's like, crap, we didn't get, any offers. So, I mean, you might not have to worry about it as much. And can I just and Mike, you'll just.
Well, see, let's back up there a minute, right? So think about that. You're going to market something. You're not going to put anything out. You don't get any traction. Then the second open house, now, we're a 2-1 buy down flyer. There may not be traction there as well. My suggestion would be try to build this $10,000 to $12,000 in your expected purchase price. So the seller right out the gate says, okay, they wanted 600. Let's market it at 609, assuming you're going to give a 12,000 concession.
I just hate listing something a little higher than I was planning on listing it.
Yeah. No, I get you.
It's tough. It's tough to get the seller to agree that yes, I got them to agree to list at $699, even though 6 months before people were getting between $720 and $750. Now I'm like, let's bump it up to $709, knowing we're not actually capturing all the buyers.
Give it 3 months and those expectations will be right back where they need to be, because we're in for a tough 6 to 9 months. I'm not gonna lie. I've seen this before. I've seen the traction, the stuff that's coming in. The next 6 to 9 months, sellers need to know exactly where this market is headed. It's not going to be good. You're not going to get anywhere near where you were going to get 6 months ago. And up front, that just needs, you know what I mean? If they want things to go quickly, then utilize. If not, if they're not on a time frame, they don't want to put it on and have it go quick. Hey, let's try to do anything we can to figure it out. And if it gets to that point where there's not a lot of traction, utilize this wherever you guys feel that you're going to be able to gain some type of advantage through the scenario. Rana, you have a question?
Yeah. So with the buyers, if they're eligible for the mass grant, does that have anything to do with this program? Are they not eligible for both?
No, we don't have access to the mass grant program as of yet. We're working on that. And it is a difficult program because they actually have to qualify without the grant program prior to being eligible for that grant. So there's a lot of disinformation regarding that that just come out and say, hey, 50,000, it's not as easy as they're marketing it. They technically have to have the assets available to qualify for the purchase prior to getting the 35 or 50,000 from that mass grant program. But I believe you can utilize additional scenarios. For example, the city of Lynn gives 7,500 silent second for closing costs. I believe that can be used in conjunction. If you're getting a concession within the contract, I believe that you should still be able to utilize that as well. Now, this 2-1 buy down from our wholesalers does need to come from the seller as a concession on the mass program. Basically 50,000 they would be able to utilize towards either reducing their loan amount or reducing their interest rate. So they could potentially utilize 12,000, 13,000 in that program to buy it down on their own. I don't have the specifics details on that, as we are trying to work with one of the, we had a meeting with the, Mass Housing with that cherry tree a couple of weeks ago. The head of Mass Housing was there, and she basically said that they're not accepting any new lenders until at least 2023 for this program. So any established lenders would need to be in place already. We do have one wholesaler in the broker channel who is approved, and we're trying to get signed up with them now, but it's been a little bit more difficult, than we would have liked. But again, the parameters of that really need to be dived into, because from what I've heard from other loan officers at different companies that I talk to on a regular basis, is that it's not as easy as it seems to get an approved position for that program.
Thank you.
Anybody else? Questions, comments, suggestions?
Will you come to the open houses and explain all this to the people?
Yeah, listen, I'm open to do anything. I mean, right now, the buyer pool and loans, I mean, we've got to rebrand ourselves and kind of, this is a market where you've got to change, you've got to evolve. The lenders are putting programs out there to try and help so this market does not completely crash. And I'm definitely available. And anytime you guys need to call me, you have a client needs, or even a seller needs to be explained to, I'd be more than happy to take a field phone call, show up to the open houses. Absolutely. And Carolyn is great at the co-marketing and branding. I think she missed her calling.
Oh no, I get to practice it plenty here.
Marketing perspective. So if anyone wants to put the flyers together with their co-branded information on there, we can get that stuff in hand prior to the listings hitting on weekends.
Mm-hmm. Great. Well, we have great questions. If you guys have any other questions, you feel free to reach out to Mike. After this call, I'm going to send out the recording and I'll attach his information at the bottom. But yeah, great call. We're going to continue to have these calls, probably at least once a month as the market's changing. And as we get more feedback from all of you, I think everyone enjoys jumping on and sharing information and see what's going on and feel like you're not on an island. Everyone's kind of feeling the same issues and pressures that all of you are feeling right now. But if you do need any marketing pieces, feel free to reach out to me. I can happy to customize the 2-1 buy down or any other pieces of information you want me to put together. So thank you all.
Thanks, guys. Have a great day.
Bye.
Thank you.